Are you struggling to understand your business numbers? Are you wanting to take your business to the next level? Well, each week here on the Local Small Business Coach podcast, we dive into your business to help you not only understand the business numbers that matter, but we will discuss how to use them to increase your profits. Hi, I'm Tammy, and I'm on a mission to help our badass local business owners take their business to the next level. So if you're a badass or a badass in the making, let's get this party started. Hey, badass business owners, it's Thursday. That means it's Know Your Numbers Day. And today we are going to tackle your balance sheet. Now, one of the things I like to do if you're new to the podcast, I like to break it down and make it nice and easy and talk a language that you guys all know and understand instead of this accounting talk that everybody tries to throw out at you. Because all that does is make you more confused. And there's no need to be confused if it's something that you need to understand. And I want you to understand different things that you have. Now, a balance sheet is something that a lot of businesses have, especially if you have any types of assets, things of value in your business. And if you have tools, equipment, trucks, stuff like that, then you absolutely have them. For some of you guys, you're going to have a lot less than others, but you're going to be more cash heavy than equipment or debt. If you have any debt in your business, it includes all of that stuff. And we're going to dive into what that all means. And for some of you guys, if you have a bookkeeper, every month they probably give you a balance sheet with all of your paperwork when they give you your P&L income statement. And you probably look at it and then throw it in the drawer, just like you do your P&L, which we've been working on, you understanding to read your P&L. Now, a balance sheet is one of those important reports that you look at. It's not necessarily the most important, but it is very important. Now, let me explain why. All right. A balance sheet is very similar to net worth. It is basically the net worth of your business. Now, to make this simple, let's put the business aside for a second. We've all heard about somebody's net worth. What is it that they're worth? Just because they make $1 million doesn't make them a millionaire. All right. It's really about how much money and how much you have left over. So we take it involves a couple different things. The first one is called assets. And assets are anything of value. So obviously cash is an asset because cash is king, right? Cash is the ultimate goal. So if somebody has cash on hand, now it could be in the bank, but if you have cash, it could be in your pocket. But if you have cash, that's an asset. It's worth something. Well, if you have a car is an asset if it has a value. So let's just say you have a car and that car is $10,000. You look it up on Kelley Blue Book. If you sold it, you could get $10,000. It's an asset. Your house is an asset. Equipment that you have laying around, anything that you can sell and create cash is considered an asset. However, some of those same items can also be considered a liability. And a liability is something that you owe. Okay, so assets are things that you have and liabilities are things that you owe. So let's go back to some of those items. So let's just say our $10,000 car still has a $8,000 loan on it. So we have a liability of $8,000. We owe somebody $8,000. So the net worth of that car is actually the difference, right? If you could sell it for 10 and you have a liability for 8, its true net worth is $2,000. That's the difference. Well, your net worth as a person is kind of the same thing. You're going to have a column of assets, so everything that you have of value. Then you're going to have another column of liabilities, which is all the money that you owe. So it's going to be your credit card loans, your student loans, and your mortgage, anything that you owe somebody else. It could even be a personal loan that you owe somebody. Those are going to be all of your liabilities, things that you owe to somebody else. And your net worth as an individual is the difference between the two. So if all of your assets add up to $250,000 because you're including your home in there, but yet you owe $200,000 in debt to somebody, you're considered to have a net worth of $50,000. You're going to take the $250,000 in assets minus the $200,000 in liabilities, which leaves us $50,000 of net worth. That's what you are worth. Now, could you be worth nothing and actually less? Absolutely. If your assets are $250,000 and your liabilities are $300, you're going to have a negative $50,000 of net worth. And there's been times in my life and in other people's lives where we have this great net worth, then we have financial issues, we go to a negative, and then we get our way back to a positive net worth. It's very common. People who go through bankruptcy typically have this issue, and that may have happened to you. So you kind of can have this net worth that's in the positive and the negative. The goal is to grow your net worth. You know, the everyday millionaire, the millionaire next door, all of that is about the fact that somebody whose assets are way above their liabilities. A lot of people who look like they're millionaires or make $1 million, their net worth is actually a lot less than other people's because they're trying to live like the millionaire. So they're spending, so their liabilities are extremely high. So yes, they have this high assets coming in, but they also have these high liabilities going out, which means that they really aren't worth a lot. So there's people that live in these really high, fancy, falutin neighborhoods, and some of you guys have probably even serviced some of those people, and they look rich, but the reality is on paper, they're not. Because once you take them apart, they're really not making the money that you think that they're making. So when it comes to your business also has a net worth. And instead of just calling it your net worth, this is where the balance sheet comes in, because the balance sheet is basically saying your business's net worth. And on this balance sheet, you're going to have several columns. So the first column is going to be the assets that your business has. So under your assets, you're going to have some things that are being used towards seeing what it is that your company is worth. So if you think about it, some of the assets that you have as a business owner is going to be like the cash you have, your accounts receivable. That's the money that people owe your business. Like you've got bills outstanding. Those are accounts receivable. That's money owed to you. You've got your inventory that's worth something, supplies, vehicles, equipment. If you happen to own a building or you've got some land somewhere that you store your stuff on, investments, things that you've already paid for, like insurances, things like that. Those are all the assets of your business. And that's one of the things that are tracked on your balance sheet. So if you have a balance sheet, you pull it out, that's basically what your assets are. The next thing that you've got is you're going to have some liabilities. And these are things that your business owes to other people. So for example, your employees are paid in arrears. So your employees have earned money that you have yet to pay them. So your wages that you owe people would be a liability, because if all things were balanced, you'd have to pay those people. So you owe them money. That's a liability. Your accounts payable are other people that you've owe money to. Vendors are typically in this where you owe them money. Expenses that you haven't yet paid, for example, your utilities might fall into that. Things that are coming. Credit card debt, other loans, mortgages that you might have on anything, interest if you owe somebody, some taxes, IRS, if you haven't paid them yet, you owe them. So those are all going to be your business's liabilities of what it is that you owe them. So now we've got our assets and we have our liabilities. And similar to where before we said net worth, well, that's kind of where we start getting into the third bucket on your balance sheet, which is called your owner's equity. And your owner's equity is the money that's also in the business, because the equity, the net worth, is going to be held in a couple different ways. It's going to be money that's in an account that's set aside as retained earnings. And you might recall we talked about retained earnings in a previous, I think last week, and that's money that's in reserve to hold, and you're holding that because you're going to buy equipment in the future. Maybe you got seasonality problems, and you need to have cash on hand to be able to do that. But it's money that's sitting inside of the business. And then you have what's called owner's equity, and that's the profits that are above and beyond. So the difference between those assets and those liabilities, a lot of times, is when you back out from the retained earnings part, the cash that you're kind of sitting on, a lot of times that's going to be your owner's equity. And that's where you're making money off of the difference between your assets and your liabilities. So you've got your owner's equity. Could be money that you put into the company originally, stuff like that. So what happens is on your balance sheet, it's going to look at those assets, those liabilities, and that owner's equity. And when you put them all together, it's supposed to, quote unquote, balance. So your assets basically equal your liabilities plus your owner's equity. So that way we'll know how much money you should have in your equity based off of all of the assets that you have, minus those liabilities, and all the rest of it kind of falls into that owner's equity to make it all balanced to zero. And really it's called a balance sheet because it's really tied to an accounting theory, because in accounting, they kind of, wherever you take from one place, you put somewhere else, or if you add something somewhere, you take from somewhere else. That's why it's always supposed to balance. So the whole concept of balance sheet is really to do with the accounting principles. But at the end of the day, really what it is, it's just your business's net worth and what its value is. And it's just a snapshot in time. Like your personal income, your balance sheet is going to change based off of what you've done over the course of the last 30 days. So for example, in our personal life, if we make $1,000 and we only spend $50 or $500, our net worth technically goes up $500 because we didn't spend it on anything else, right? So in your business, it's very similar. So if you make $1,000 and you spend $500, your business's net worth will also go up $500. And in order for them to bring that back to zero, basically what happens is your owner's equity goes up, which will bring it back to a balance within the business. So they have a place to account for it under the owner's equity. Now, I hope all of that is making some sense, because I know it can get kind of confusing. And matter of fact, in the Know Your Business Numbers course that I've put together, I'm actually going to be doing the video module, recording it today and adding it to the course, because that's going to be the next module in that course, is on this whole balance sheet. So if you are interested in learning a little bit more about balance sheets, then I highly recommend that you go over to knowyourbusinessnumberscourse.com or look in the show notes. You know, I've got a course on all of your business numbers. It's dirt cheap, folks. It's like $49, and it's going to help you understand, record it, have it up there in the next few days. But your balance sheet, you don't have to be afraid of it. So anytime you hear the word balance sheet or someone hands it to you, you want to look at it, because that's kind of one of those cool things. It can be depressing, don't get me wrong, if you're not doing that well, but it's always good to know where you're at. And that's all it is it's just letting you know what all of your assets are, what you owe people, being your liabilities, and how much equity you have as a business owner in the business. And bigger companies, you'll hear it sometimes called stock owners. It's just because people buy into the company and have stock in the company. But for the majority of you local small business owners, it's like you, maybe your wife, as the business owners. So it's going to be your owner's equity. It's the same thing as what you guys have in the business. So it's just assets, liabilities, and owner's equity. It all balances out, and it's just net worth what you have in the business. I hope this helps you guys and helps you understand that. And next time you get your balance sheet, or if I was you, when you're home or you've got it, go grab it, go take a look at it. If you've got one that your bookkeeper's been doing, take a look at it, see what it is that you see. It doesn't have to be scary. It doesn't have to be one of those papers you don't need to worry about. It's actually a really good number for everybody to know. And I highly encourage you to do your own personal net worth, because guess what? When you're doing your personal net worth, you have a business, and your business is part of your net worth, right? You have an asset or a liability, because they're at the same time, especially if you are a solopreneur, your business is part of your net worth. That's one of the reasons why I'm on you all the time, for you guys to grow your business, because that's going to ultimately increase your net worth. We don't want you living like those people that act like they've got $1 million and they've got nothing. My whole goal is I want you to run a business that you've got money, owner's equity. There's a lot of people. So a lot of times when you see those businesses with those fancy trucks or somebody who looks like they're big time, don't get too hung up on it, because unless you look at their net worth and their balance sheet, they might not be doing as well as you think they are. Because at the end of the day, in order for them to look that flashy and to do all those things, they're spending a lot of money. They have a lot of liabilities to go along with it. So the balance sheet is actually where you're going to see how much the true value of that business is. And by the way, if you ever go to sell your business, guess what? Your balance sheet is going to be the key in what it looks like and how much your business is worth and its value, because that's one of the things that you want to take a look at when deciding. So if you're going to ultimately buy out somebody else's business, you need to understand that balance sheet, because that balance sheet is going to let you know a lot about that business as well. So as you can see, balance sheets, a lot of cool stuff on there, a lot of good stuff for you to understand. Doesn't have to be scary. Assets, what you own, liabilities, what you owe, and then the equity is what you have at the end of the day when you balance it all out. All right, with that, I am out of here, and hopefully that helps you guys out. And like I said, if you are interested in that course, just head on over to knowyourbusinessnumberscourse.com. Don't forget the course on the end of it, or do the show notes, or go over to localsmallbusinesscoach.com. It'll be over there as well. All right, with that, I'm out of here, and I'll talk to you guys on the next episode. Bye for now. Hey, before you go, if you're looking to learn more about your business numbers, then check out the Know Your Business Numbers course, where we take a deeper dive into the key numbers, the calculations, the reports that will help you take your business to the next level. My mission is to help everyone love their business numbers. Yes, even including those of you that hate math. So much profit is hidden inside of your business numbers, and I want you to create some awesome profits. So check out the link in the show notes, or head on over to the knowyourbusinessnumberscourse.com. Once again, knowyourbusinessnumberscourse.com. Come join me. Let's go ahead and work on building your profits.